Hello, I'm Steve Tomaszewski, and this is Making Solar Finance Simple with Raise Green. Today, I'm with Matt Moroney, Chief Operating Officer and co-founder of Raise Green, and for a little bit of Solar Finance 101 and a conversation on how much easier it can be when you finance your solar projects with Raise Green instead of using traditional channels. We'll look at why solar finance can be so complex for people and how Raise Green gives you a chance to take back control using one simple project finance template. Hey, before we get started, I want to add a quick plug about our next event, December 1st, Raise Green, how to look at a power purchase agreement versus financing with me, your host, Steve Tomaszewski, and a very special guest. You're not going to want to miss that one either. We definitely welcome your questions throughout the webinar today, and we'll address them at the end or during. If we don't, I will respond to them personally. And if you have a question, just send me an email at steve@raisegreen.com. Please use the Q&A button, if at all possible, on your screen, and you'll be free to be looking at any Q&A on the screen at the time. In case you're just getting to know Raise Green makes it easy to invest in climate solutions even in your own hometown. Meanwhile, we make it easy for people to invest directly in your solar projects, so you have at your fingertips a new source of financing from impact investors, people just like me and you, and who aren't stuck relying on traditional financiers. The welcome survey, if you have a project you want to look at right now, it's called a welcome survey. Visit our website and click Get Funded. Couple of short questions, or again, send me an email at steve@raisegreen.com. Happy to talk with you. Let's have a short 5-10 minute Zoom meeting and see if we can help. We look at to fund many types of climate projects like solar, energy efficiency, and even renewable solutions. Ask us. But we're seeing a lot of interest in the solar space, and we're thrilled because crowd investing is such a huge opportunity that's underexploited in the solar industry. Now, next week, I'm going to be in Mexico City at the International World Solar Conference. If you're there, you'll see me in the bright Raise Green shirt. Come on over and say hi. So, Matt, let's get started with a little legal conversation about solar finance. You and I were out talking with clients last week. We talked to small installers. We talked to some of the largest EPCs in the nation. Matt, what was the number one pain point that these installers and EPCs were having with financing their solar projects?
Hey, Steve, thanks for having me. Really what we see is rigidity. A lot of projects are stuck. There's stiff requirements and terms set by traditional financing partners, or even an unwillingness to fund projects that are too small or medium or outside some particular remit like geographical area. So what I really want to talk about today is how Raise Green provides developers financing flexibility. Solar project financing typically has three components: sponsor equity, tax equity, and debt. The sponsor provides the equity, is the GP, and responsible for the whole development. A lot of our listeners are probably in this category. Tax equity partner comes in and monetizes the tax credits in exchange for about a third of the capital. And the debt fills in the gap to lever up the project and improve the equity holders' IRRs. The challenge is getting all these pieces to line up at the same time and stakeholders to agree at the right rate. So a lot of these projects are kind of stuck in this stasis waiting for something to happen. If all of them can't get rigid terms that work for the project economics or with each other, it kills the whole project. That's why we see, for example, a massive missing market for solar installations on commercial nonprofit buildings due to the complexity and just so much value left on the table. So when we talk about crowdfunding, most developers don't know where crowdfunded capital falls into their typical project structure. And it's one of the most common questions we get. Luckily, we've been working on this for a few years, and with our experience in solar project finance and funding innovation, we have a simple menu of proven models for crowdfunding your next solar project. These are ready to use right now with legal templates for corporate documents and securities. And so if you are interested in raising equity or debt with crowdfunding on Raise Green. All right.
That's awesome. You know, let's look at those. So if you're a developer or an EPC, looking to take on more control of your projects, that are funded and executed. Raise Green has a funding access, and I want to make this very clear, for up to $5 million per year. And we have a template to show you how to plug in the business. Matt, I want to make sure that we're clear to people. It can be part of the capital stack. It could be a $20 million project, and Raise Green can still help raise $5 million of that. I want to be pretty clear. That came up a couple times this week, right?
Yeah, absolutely, Steve. So this is what we're talking about, getting projects unstuck. You may need a short construction loan to actually get the project started so that all the other capital can come in. Crowdfunded investment on a larger project can also help build public support. It can make a project easier to permit. It can, by sharing profits with the community, and it gives you the status as a developer at the knife's edge of democratized, inclusive, and innovative financing mechanisms. We're seeing projects get killed all over the country because the community doesn't want them there. This is one way to kind of ease that and allow people to come in and support your project. So I want to show you 3 simple models of what we've proven out in our experience of helping project owners get projects off the ground. We're excited to have you give them a try and committed to help make your project a success. So let's start with the first one, project debt. So this structure should be recognizable to most developers on the call. In this example, the project company issues simple debt to the impact investors through Raise Green. They'll use our ready-made debt crowdfunding legal template and calibrate key terms like the interest rate to suit the project's particular needs. Many tax equity investors may not want project level debt because of issues like subordination and the cash waterfall. We won't get into that too much here, but we will say with impact investing projects, many off-takers may be of interest to smaller or unconventional tax equity investors like individuals, foundations, and family offices.
Okay.
For a little more color on this, let's look at what kind of debt this is. You may know that solar financing is driven primarily by expected cash flows, not by the asset value. So it's all about where those cash flows go and making sure that the project and operating risks are owned by whomever is best suited to handle them. The idea is that the project company owns all the assets, ring fences that risk from the sponsor. The project company farms out all the construction, operating, and market price risk to an EPC, O&M contractor, and the off-taker, which is where a lot of the partners in the Raise Green ecosystem come as well. So that's an added benefit for the developers. And so what's left is the free cash flows to pay off the debt and equity holders. And because of this, we see the debt box here as simple unsecured senior debt covered by the projected cash flows. And ideally, we'd like to see kind of some sort of guarantee by the holding company to make sure the crowdfunded investors get some protection. So
that makes a lot of sense, Matt, because a lot of people, the developers, will have a maintenance contract on this. And so they're going to protect the investor's investment. And that's really has to come across with equity crowdfunding. This is not just putting money together. They're actually looking out for the best interest, being part owner of the project. Am I correct on that?
Yeah, that's absolutely right. And that's some of the work we do with our due diligence at Raise Green. These projects got to be real. The numbers have to pencil. So, we're going to check your numbers and make sure there's high quality products on our platform. So we actually did this debt example with a project called Elmley. Here's an example of a project using this structure. Solaris Energy, the developer, combined multiple investment sources into a holding company. So they used an existing project company, Elmley Renewable Energy LLC, which owns the array, to actually raise debt against the project cash flows by issuing securities on Raise Green. The project had been operational for several years, had a secured PPA with the school. And what this allowed them to do was to provide liquidity on this asset so they could then deploy it on new projects. So we feel that this refinancing with debt, crowdfunded debt, is very attractive for developers, especially for post-flip assets or assets that they may want to actually monetize a bit. Crowdfunded capital can help there. So overall, it creates benefits for you, the developer, creates benefits for the investors, and creates a benefit for the planet by building new solar projects. So that's what we're all about.
So we have a quick question in there from an EPC, just so it's clear. Raise Green can actually refinance an existing project, cash out from the owner to use that money for another project. Is that correct?
That is exactly correct. And where I'll add a bit of nuance is that we don't actually refinance it. We allow the developers to refinance it themselves whenever they want. And that's really the power of the platform.
So this really does work for solar projects, and it can simplify your capital strategy formation. So if you are a chief financial officer, if you are the accountant, if you are an attorney, give us a call, give Matt a call or an email at matt@raisegreen.com. There's going to be a lot of questions. I want to share here and make sure everyone appreciates that regulation crowdfunding in the United States just hit a big milestone. There have now been over $1 billion, that's a B, $1 billion raised using this approach. And it's catching on more and more. But if you're in solar and you're going to leverage this, you'll be ahead of the curve with Raise Green in your industry, in your city, your municipality, your local installer. If you're a small installer looking to get into those bigger jobs, you're turning down jobs every day, auto dealerships, hotels, restaurants, hospitals, municipalities, give us a call at Raise Green. Let us help you. It's a very simple project. Now, because there are a lot of folks who simply haven't discovered this option yet, let's add a reminder, everybody, at the end of this. If you want to submit a project, just go to our website, and up in the upper left-hand corner, it says Get Funded. Click on a few, putting name, address, telephone, email. Tell us what you're looking to do. Or again, send me an email at steve@raisegreen.com. Matt, I want to ask you a little bit now. We have a question about holding company debt. Can you expound on that a little bit?
Sure thing. So we actually have a whole model that we've developed and employed with holdco portfolio debt. So this structure has the added benefit that you can raise funds for multiple projects from a single entity. If that suits your business needs, you can reuse that entity later for other projects. And so this can really simplify how you put financing together for your incoming pipeline.
Wow.
And what's beautiful is it can be reused every year. So with regulation crowdfunding, you can raise up to $5 million per year. So the holdco can raise either debt or equity and then lever up on that appropriately to deploy into an existing pipeline. And we're talking to several developers right now interested in financing multiple solar projects with one raise. And in fact, what we have found is that, okay, oops, sorry. No, it's all good. What we found is that, oh, okay. Yep, sorry, I see what slide we're on now. So this is kind of typically referred to as like a back leverage structure. It's fairly common in solar project financing. And the solution is to hold the debt at the holding company level. Now we have a big chunk of sponsor equity value that's underpinning the ability to pay back that debt. And it's on more of an equal footing with the other equity holders.
We got a quick question in there from one of the people we talked to this week, actually in Chicago and one in California. They're asking the same question, Matt. They have a $20 million project that they've been trying to get funded. They're saying if they can come to you at Raise Green or to us at Raise Green and get $5 million funded, wouldn't it be easier for them to try to get funding for the only $15 million from another source, but have that commitment right up front? That's a big question.
Yeah, definitely. So a lot of times, you know, the financier may be interested in coming into the project, but they want to make sure the developer has a little skin in the game. They want to see that the projects move forward a little bit, that it's at NTP, close to NTP, before they commit the capital risk. Knowing that they are undergoing a regulation crowdfunding offering, that they have capital coming in for that project, can do a lot, like we said at the beginning, to get projects unstuck and have the other sources of capital flow into the project.
Great. Let's go to holding company portfolio debt. Next slide.
Sure.
Go ahead.
Okay. Oh, sorry, I lost you for a second there. Okay, so this, like I said, is a structure that can be reused for debt. You could put equity into the holding company on regulation crowdfunding. You could put debt. Either way, the holdco ends up repaying that debt through the aggregated project cash flows. Typically, this structure, like I said, should be very familiar to a lot of solar developers, and fits nicely in with how tax equity is typically designed in portfolios as well.
Okay, the question I have now referring this is, we actually had an inquiry last week. It was one developer with 37 projects, but the projects were anywhere from 100,000 to 500,000. Can Raise Green help that developer do multiple projects up to $5 million per year, or does it have to be one project at $5 million only?
No, definitely, it can be multiple projects under one raise. We do have some criteria. We want to make sure that this isn't being used purely for development capital. We want to make sure that this will actually go and trigger a project being constructed. And in fact, we have deployed this structure with an example with Block Power. This is an example of one of our issuers, a developer of energy efficiency projects, but the same strategy. About a dozen projects. Some were built, some were under construction. They were aggregated up and paid for with one raise for debt. They raised about $1 million. 280 people came in. They had a bit of a guarantee from the project company with $100,000 in cash in there, and all the funds will be used within 12 months for additional installations. This is paying crowdfund investors 5.5% over 12 years at a minimum of $100. And so we saw a wide range.
Let's say that again, because we're looking at the screen right now, and they looked to raise $997,000. Is that correct? And they did it.
Yeah, they did. And so,
well, Raise Green did it, right? Raise Green helped.
Hey, crowdfunding, it takes a crowd, right? So, we have our marketing and brand that we bring in. We provide some tools and templates of what we suggest the market of the issuer should do with their networks to activate them. And then, we see people coming in looking for things like this as well. So we're here to support you. We can't guarantee your raise gets filled, but we do know that this market is growing every day, and we're seeing more and more interest every day in direct impact investing.
And this one in particularly, Block Power, what were the terms that the investors made it so attractive that they wanted to invest? How many years? What was the return?
Yeah, so 12 years at 5.5%.
So it doesn't have to be 20 years. It could be any. I think that's a real great question. A lot of people are stuck on 20 years. This one's 12. And what city is this client in?
This is in a number of cities. So the projects are scattered all over through the US.
Wow. So any developer can come back up to $5 million a year on one project or multiples, and set the number of years back with or without a PPA. We can talk about that more next month. That's utterly amazing. We love Block Power. Great company.
Absolutely. Big fans of their work.
All right.
So
we've really had some great questions. We're going to get to them in a minute. We've really helped progress this kind of financing in the solar industry, and people don't even know that it's an option, that there are up to $5 million a year in opportunity available at their fingertips. And this can be a flexible piece of your capital stack. And we keep saying that word. It's new to new people who are small installers becoming EPCs, comprehensive financing strategies, so developers can win more of the projects in the pipeline. Quick question thrown in there, Matt. We have several projects we couldn't get funded this year. We have churches, a municipality, and a water theme park. Can Raise Green at least look at these? Would they be able to look at, looks like an $800,000 church, a $1.2 million municipality in upstate New York, and a water park in, looks like Oklahoma. Can Raise Green look at those? What would be your immediate comment?
Sure, absolutely. We have models that we will run your projects through. We'll tell you if it makes sense to use crowdfunding. We're happy to do that for you because we want developers to know about this new toolkit in creating their capital stacks. So fill in the welcome survey, talk to Steve. He'll get the details you need, and we'll get some information back to you on whether or not this could make sense for your project. Can't say yes or no before we see the numbers, but we're happy to take a look at most things to keep the whole industry moving forward faster. All right, so one last structure here. This is our third key structure option. Just like you can get a loan from the crowd for your holding company, you can issue shares of ownership in that company instead. You may do this for a few reasons. You might already have debt on your balance sheet. You don't want to add more. Debt is senior to equity, so you may want to issue some different types of shares with a different repayment priority. Equity is also more flexible in repayment terms, schedule through the dividends instead of obligations. And when you're selling equity, you're selling the value of the company and its future success based on the health of your business and pipeline. So we're seeing a lot of community projects or developers that want to do multiple projects in the same community get interested in the equity because the people who live around them want to buy into this and want the company to grow and succeed in the future. You might be really interested in engaging that community, right? And these are something developers are coming to us. How can we get community ownership? Do we need a co-op? Do we need to, be a B Corp? What do we do? And we say, look, it's here, it's on the books, it's called regulation crowdfunding. You can have community ownership by selling equity to the crowd in your community. So you can raise up to $5 million per year in holdco equity, which is, for the savvy developer, they know that they might be able to raise 2, 3, 4, maybe even 5 times the amount of debt there. So you raise $5 million in equity, then you go to the bank and you say, look, we have $5 million in sponsor equity, give us an $8 million loan. Suddenly you're building a huge project. So we think this is where the flexibility really comes into play. And we expect many more developers to get increasingly savvy to this mechanism, setting your own terms, defining your own security, creating debt rates that are flexible to your project that make it work. Because we know every developer here wants to make projects work. And that's what we're all about.
Okay, one of the questions just came in. This is from California. I like the idea what Raise Green is doing, but I'm new to crowdfunding. Can you help us with templates and advice to make this successful? We would like to try it, but we've never done it before. Can you advise us, please? Matt Moroney.
Absolutely. The truth is everyone is new to crowdfunding. This has only been around since 2016. Not a lot of people are working on solar in this. And that's what we've been doing for the last few years. So we're happy to share all of our learnings, our tools, and our templates for you to take advantage of this new flexible financing mechanism so that your community, your peers, potential clients can look at you and say, wow, this developer is using something that's very interesting, it's cutting edge for inclusive ownership and making these projects that we thought couldn't move forward, move forward. So that's what we're all about. We're happy to help. Fill out a welcome survey. We'll take a look and we'll see if it makes sense for you.
One of the things is the Wood Mackenzie study. Can you comment on that and also the acceptability of equity crowdfunding in Europe? In fact, for those of you who don't know, Matt Moroney and Franz Hochstrasser are actually in Glasgow at the World Summit. So we take this very seriously. What's equity crowdfunding like, and what's the opportunity in the United States as compared to Europe, Matt?
Well, it's very common in Europe to use equity crowdfunding. It's kind of a novelty here. It's considered a novelty amongst the traditional financiers, but exceptionally common in the UK, in the Netherlands. Most smaller green projects look to this as almost a go-to mechanism. People are doing affordable housing, they're doing community solar projects. And it's really, it's a much bigger market in the UK and the EU in general. We're trying to compete with them a little bit.
So we look at, to put it into context, as of the end of 2019, the United States had around 71.3 gigawatts, and it's less than 3.5% of the CNI opportunity of the 2020 study. So there's 600,000 potential commercial buildings in the United States. And when you go to a regular bank, they go, you have to explain solar to them. Now, your team, at our team at Raise Green, has all aspects in it. You have project developers, you have all these people. Can you explain to everybody how you're able to help them so quickly? If they bring you a project on December 1st, how quickly can it be up on the Raise Green platform? Does it take a year or 2 years? How long does it take? Does it take an hour? Does it take a year? Tell us about that.
Yeah, absolutely. You could think of it just like a traditional loan application you apply for financing at a bank, or if you're pitching a limited partner to provide equity into you as a developer, you're going to have a number of meetings. It's going to take a few months to close this and that. We will walk you through the whole process of structuring an offering with regulation crowdfunding. And if you're motivated and focused, we can get it up on the platform in about a month. And then it goes live. Can be live for a whole year, can be live for as little as 21 days, depending on how much buzz your project creates. So we feel that it competes with the typical timelines of financing and offers more flexibility to developers in how they actually can make their own terms rather than taking the terms that they're offered after those meetings and applications.
Okay, and at the same time, if somebody brings you a project that you can't do, it's immediately declined within 48 to 72 hours. Is that correct? Because
that's right.
What we heard in the industry is they had this $3 or $4 million project going on for months, and they keep calling them back. They need another form. They need another tax reference letter. They need this and that. So it's kind of refreshing to know that Raise Green has a system in place to where here's your list of documents. Here's what you need. And if you have that, we can move forward. So really, it moves as fast as the speed as the developer can submit the documents. But you really ask for all the documents on day one, don't you?
Yeah. We look, everyone's busy. The climate isn't getting any cooler. So we want things to happen faster. We don't want to waste your time. Really, we have spent a lot of time trying to fine tune our onboarding process, the speed in which we review projects, so that if it doesn't work, we'll tell you right away, on to the next one. The truth is, we see regulation crowdfunding, Raise Green. We want it to be the number one source solar developers come to first, before they go to the bank, before they go to private equity. Come to Raise Green, push it through. We'll see if a project works, and give it a try. You might like it, and we think you will.
Okay, final question, then we're going to go to the Q&A. I have one from a developer in Arizona. I have several projects that have been waiting for finance over 60, 90, and 120 days. Can I also bring these projects to Raise Green today, or do I have to wait till I'm accepted or declined at the other bank this month or next month? Because these projects are ready, they're signed, they have a signed PPA, they have a signed notice to proceed, they have the equipment lined up, but they've been waiting over 60, 90, 120 days, yet no response or commitment from the bank. What would you say to that client?
Yeah, I don't know the particular nuances, and some applications have like non-competes and non-circumvents and all these things. But if you don't, certainly do. We're happy to take a look at projects, and it might even fit in to that capital stack as well in a way that could be quite complementary.
Okay, let's go over to Laura Polari, and we have some questions coming in. And if there's any more slides that you want to show, Matt, please do. It's a sunny day here in Chicago. Matt's in Glasgow. What questions might we have through the Q&A? Laura, Matt?
Yep. First question we have here is, will you accept project structures other than the ones you've presented today?
We're always looking for new project structures. These are the three we're currently offering. So this is kind of, you can think of it as our first release, is these three products that are available, ready to go. If you want to make your own structure, it may take a longer time to do, but we're interested in working together with you to see if it might work. And even if it's something that might be templatized and offered to other developers, or for you to copy many times. So reach out and we'll take a look at it. But these are the three products we have ready to go. So you may not need them, that new structure. So we can talk about that on a call.
Great, thanks, Matt. Next one we have is, what is the maximum term in years of raised green capital?
Yeah, thanks, Chris, for the question there. Typically, first off, it's crowdfunded capital, right? So it's not ours. We're not making the decision, but we do help structure the securities based on what we think is most interesting to the market at the time. We have Jackie Logan on staff, who's spent decades selling bonds on Wall Street. So we're developing a whole yield curve on what debt rates are attractive. Truth is, there's not a lot of benchmarks in green crowdfunded private equity. Typically, we think debt, 5 to 12 years is kind of attractive for term loans. Construction loans are a little different. Refinances might be a little shorter. Different interest rates, different durations appeal to different segments of the demographics. We typically avoid debt any longer than 10, 12, 15, 20 years. It's just getting too long that, unless you're offering very high interest rates, might not be attractive enough for you to actually hit your target. So a lot of the work we do working with you is to say, what actually might sell. And we're happy to have that conversation in detail if you have any particular specifics in mind, Chris.
Any other questions that we'd like to address right now?
I think just one more. What is the smallest project that Raised Green will support?
Yeah, I mean,
Neil.
Yeah, Neil. We want these projects to benefit a lot of people, right? So, at first we're thinking, 10 kilowatt projects will crowdfund. Truth is, it doesn't kind of make sense to issue securities for that as much unless you're really dedicated and it's a really kind of more of a philanthropic, charitable style project. So typically we're looking for projects in, say, 100, 150K to the 5 million range. We say typically about 50 kilowatts up to a few megawatts, but hopefully that provides a bit of a framework for you to think about it.
Yeah, I think the logic behind that, Matt, thanks for the clarification, is that if you're a developer and you have several small projects, the goal is not to, there are other entities for that. There are great companies out there who do, and when you look at those, they really fall under a residential side. This is a commercial industrial side. And you also have to look at the time and the return on investment for the developer or the installer. And so you would actually make more money doing it residentially through one of the top 10 developers on their platform than through here. Our investors, and I just want you to expound one more time, there's two things going on here at Raised Green. We're the sales side. We want to listen. You have a project now. If you're a developer and you have 5 or 10, 50 or 100, we had one with chicken coops. They were only 100 kilowatts. Guess what? It was 14 chicken coops, and it's from a major brand. So I mean, so would we look at 100 kilowatt? Okay, we'll look at it, but there's 13 more behind it. Now it's making sense, right? So if you have a question, give us a call, give us an email, steve@raisedgreen.com. Go to the website. And Matt, I don't want to forget about how attractive it is even for our investors. Can you just talk a little bit if somebody said, I don't have a project, but you know what? And this came up just last week. My father-in-law, the person was saying, is going, this has a better return on investment than some of his annuities and other investments. So can you talk a little bit about if people did want to invest on the Raised Green platform, please?
Yeah, absolutely. And so, we are a regulated entity, so we actually can't offer investment advice. We can't tell you this is good or bad investment. We don't want to, but we do know that a lot of people, my mom's a great example. She's like, stop hounding me about climate change. I want to do something, but I don't know what to do. Raised Green, come look, see if anything is interesting for you. This is an alternative to the public equities markets, which are pretty high right now. But like you said, all investments have risk. Don't invest anything that you're not prepared to lose. But we think it's a cool option for people who are interested in impact. Come and take a look, see if it matches what you're looking for. I see one question from James asking about whether or not a municipality can use this. Municipalities, you're right, are correct. They can't capture the federal ITC. However, if a private developer does use one of our structures and has an offtake agreement with the city, then they can. So in that case, we would encourage the municipality to look for a private developer, use a structure like one of the ones we presented today, so that the tax equity could actually be harvested from the project. And we know a lot of developers are really interested in working with municipalities because chances are they're going to be around for a while.
A lot of people in that space, even here in the Chicago area, trying to find ways to grow green and saying, here's what we need. I think there's one more question, Matt. I'm having a little problem reading. Was there one more question, or was that the one from James?
Yeah, I see one more. Chris, I don't quite understand what you mean. If you wouldn't mind rephrasing it, I can answer, or we could talk about it. Let me just read it once more.
While we're waiting for the read, let me remind everybody, next month, December 1st, I'll be back from Mexico City. Hasta pronto. Hey, join us next month. Learn about the PPA versus financing, especially the SMB, the small to medium builders, okay, small to medium business, installers looking to get into becoming a larger developer. Are you an electrical contractor? Are you being tired of saying your bid's too high? Give us a call at raisegreen.com, Steve at raisegreen.com. Go to the website, do a short intake form. Heck, set up a 5-10 minute Zoom appointment with me. You get a free $5 Starbucks gift card to any cup of coffee you want. I hand those out at the fair. So you see me, ask me about that Starbucks gift card. We'll have a cup of coffee together. Matt, did we get that last question?
Yeah, sure thing. And just, everyone knows it's pumpkin spice latte season. So those gift cards are.
It's only $5. It's not $50. It's $5.
Okay. Chris, I think your question, and ping me later, send me an email, Matt at raisegreen.com. Okay. Oh yeah. Okay. Yeah. That's good. Thank you for that. So look, typically what we find in our investments to date is that the Raise Green brand brings about a third of the investors in, people who are investing in every offering. We have actually people who have invested in every single one, which that just really makes me really happy that people believe like that. We have many people that have invested in 5, 6, or 7 of them too. So we do have, interest in our list. Typically find that fills about a third of the capital. The issuer, the developer, most people have mailing lists, social followings, friends and family that may be interested in investing in projects like this, but haven't had the opportunity to do so. Now they can. Typically, we find that fills about a third of the stack. And the other third kind of is what we call like earned media. So people hear about it on on the radio, they learn about it from an event. A newspaper article comes out about it, or people are just kind of like Googling around, hey, can I invest in solar, this type of stuff, and they just kind of find us. So a third from Raise Green, a third from the Issuers Network, and a third from a growing interest in doing something to address climate change.
Absolutely outstanding. What a great time to be in equity crowdfunding. Raise Green. Remember, next month, December 1st. How to actually look at, and Raise Green has the documents that you need in your templates, right, Matt? If they need any of these documents for equity crowdfunding, we have them. If they need help or advice, we can try to show them to them what questions they have. But the number one thing we want to leave you with is to say, give us a call, send us an email. Let's start a conversation. Right now, I want to say a special thanks all the way to Glasgow to Matt Moroney, Laura Polari, Franz Hochstresser, Lauren Hale, everybody, Jackie Logan, Tyler Ogden, Ben DeLynn, Antoine, everybody, Mitchell, who's helped in this event. Raise Green, a great company. Final word from the COO. We'll see you next month. on the Meet Raise Green PPA versus financing December. Look at for your email and those final words, the slogan coming from Raise Green all the way from Glasgow. Matt, take it away.
Yeah, Raise Green makes it easy to invest in solar and climate. A lot of people want to. A lot of people want to do something. They don't know what to do. Come to Raise Green. They can take a look and invest in your project. We think a lot of people are interested in stuff like this, and we're seeing it. We're seeing hundreds of thousands of people marching in the streets for climate. So come to Raise Green and actually make something happen. And hopefully they can make something happen for your project at the same time.
Matt Moroney, Chief Operating Officer, Raise Green, live in Glasgow, Scotland. I'm Steve Tomaszewski in Chicago, on my way to Mexico City. Remember one thing, folks, real change starts with you. See you next time on Raise Green.
Thanks for coming. Bye-bye.